Sam Bankman-Fried, a 30-year-old who founded FTX, one of the largest cryptocurrency exchanges in the world, recently, as the summer of 2022. Sam Bankman, often called SBF, managed to amass a net worth of $26 billion. But his worth did not last for long, as his company went bankrupt by the end of 2022, and he was charged with several crimes including wire fraud and money laundering. How did things go wrong in the blink of an eye? Let's disclose the reason for the FTX disaster and see how one of the crypto giants went bankrupt in less than 10 days. Famous people like Steph Curry, Shaquille O'Neal, Tom Brady, and Larry David served as ambassadors for FTX. Kevin O'Leary recently revealed that he received $15 million in compensation for serving as the FTX spokesperson. FTX raised an enormous $400 million in a funding round in January 2022, bringing the total funding to $2 billion and the total valuation to a whopping $32 billion. If you're thinking about why such big names supported fraud, well, it's not their fault because just like you and me, nobody knew that this could happen. Because a few months ago, nobody could even imagine that a billionaire person who looked like a genius nerd, wore t-shirts and shorts, and drove a Toyota Corolla could be behind such a huge fraud. In 2021, BGF emerged in the media as a shining example of how the extremely wealthy, who appear to have limitless wealth, might use it for good. Numerous profiles have been written about him, and he even appeared on the cover of Fortune. Everyone saw him as a cool person who liked to play computer games during pitch meetings, and his eccentric behavior was taken as evidence of his genius. According to Sam Bankman-Fried's nonprofit organization, the FTX Foundation has donated more than $190 million to date. SBF told Yahoo Finance that super yachts are so common among billionaires because they don't know what else to do with their money. He added that it's difficult to effectively spend more than $1 million per year on yourself. But SBF was not among those billionaires. Ironically, he had everything figured out. He had already developed a data and evidence-based plan for how to distribute his wealth. This is one of the reasons why his downfall is so shocking. In June of 2022, he joined the ranks of other wealthy mega philanthropists like Bill Gates and Warren Buffett by signing the Giving Pledge. He vowed to donate at least half of his fortune. That's nothing, as he already promised to donate 99% of his wealth. SBF said that he lives by the principle of earning to give. Well, he can't do it now because it was reported that his net worth had almost completely disappeared as a result of his company filing for Chapter 11 bankruptcy. It is unknown if he has any additional undeclared or unreported assets. But how did people come to know that SBF is a fraud, and how much damage has he done to people? On November 2nd, the cryptocurrency news site CoinDesk published an article about FTX and Alameda Research based on a linked balance sheet of Alameda. The article claimed that Alameda Research's main asset was FTT, the native FTX token. The article revealed that Alameda Research held a position worth $5 billion in FTT. This made the cryptocurrency industry concerned about SBF's two companies' hidden debt and leverage. The CEO of the investment platform known as Swan Bitcoin, Corey Klippstein, pointed out that it's interesting to note that Alameda's majority of net liquidity is actually FTX's own, centrally controlled and created out of thin air token. All hell broke loose after the release of that article. On November 6th, the largest cryptocurrency exchange in the world, Binance, announced that it would sell all of its holdings of FTT tokens. A jaw-dropping 23 million tokens worth $529 million. The CEO of Binance, Changpeng Zhao, said that the decision to sell FTT tokens was based on risk management, keeping in mind the collapse of Luna earlier in 2022. As a result, investors scrambled to withdraw their funds from FTX, believing that this would be the next cryptocurrency business to fail. Every person who invested in FTT must have been scared at that time, and as a result, the price of FTT tokens fell. When the withdrawal requests reached an estimated $6 billion, FTX was unable to handle them. As a result, FTX experienced a liquidity crunch, which simply means they ran out of money to process the withdrawal requests. $6 billion worth of withdrawals in just 72 hours was sufficient for FTX to halt withdrawals. On November 8th, the world's largest cryptocurrency exchange, Binance, announced that it reached a non-binding agreement to buy its close competitor for an undisclosed sum. However, the promise to rescue FTX did not live for very long because the very next day, Binance backed out of the deal. Binance declared that it could not go through the deal after the news about mishandling customer funds by FTX surfaced. On November 10th, the assets of FTC's Bahamian subsidiary were frozen by the Bahamas securities regulator. Another announcement on the same day made SBF realize that the end was much closer than he might have anticipated. The California Department of Financial Protection and Innovation declared that an investigation into FTX had been started. If you think that's a lot of bad news on the same day, then hear this. SBF took to Twitter to apologize for the liquidity crisis on the same day. He admitted that there wasn't enough funds in FTX's non-US exchange to satisfy customer demands. He claimed that FTX miscalculated leverage and liquidity due to poor internal labeling, and added in the same Twitter thread that Alameda would stop trading. On November 11th, the Wall Street Journal revealed that behind the scenes, FTX used customers' money to fund the risky trading bets made by Alameda. And using customer money like that is always a big no according to the law. The unavoidable happened, and FTX had to seek bankruptcy protection following the sudden collapse. It was reported that about 130 other affiliated companies also had to file for bankruptcy. Hours after the bankruptcy, FTX claimed that it was a victim of unauthorized transactions and plans to move the digital assets to cold storage. Some analysts suspected that $477 million were stolen in the alleged hack. On November 16th, a lawsuit was filed against SBF in a Florida federal court, alleging that he created a fraudulent cryptocurrency scheme aimed at taking advantage of inexperienced investors from all over the US. After all this, there was no way that SBF could go free. He was arrested by Bahamian authorities on December 12th. He was jailed for being connected with several fraud charges involving FTX. SBF was handed over to the US. Then, US District Court in Manhattan charged him on 8 counts, which include money laundering and security fraud. SBF did not spend a lot of time in jail because during a hearing on December 22nd, a federal judge granted him bail for $250 million bond, which is the largest ever pretrial bond. On January 1st, 2023, many people were celebrating the new year, while some might have been worried about their losses in the previous year, and SBF might have been thinking about what he should do next. So on January 3rd, SBF pled not guilty to all charges in a New York federal court, and he is set to face trial on October 2nd. He also stated in an interview that he did not know that FTX deposits were used to pay Alameda creditors. So what will become of FTX now? Well, one thing that is for sure is the future of FTX is in serious jeopardy. Many people are blaming FTX and SBF for what has happened, while there are a few who are questioning why people put so much trust in a website that was not regulated by the US Securities and Exchange Commission. Make sure to hit the like button if you liked the video, and don't forget to subscribe and turn on notifications so you don't miss more amazing videos like this.